Yeah, I hate to tell you, but you know, right? Another crazy wild day for the markets. We stumbled out of the gate on bad news, supposedly in China. But why was our market down more than 200% more than theirs was? Here's the thing. We plunged. At one point, we were actually down 540 points. We roared back in the last few minutes of trading and only finished down 469 points for the day. So we want to talk about a lot of things at the market. First, we've got to begin with the volatility, the gyrations. They continue, and it's driving us crazy. Let's bring in the investment pros. Jim Frischling, NewOak President. And I got to be honest with you, I think investors have gotten there, or they're getting there. They're a lot smarter than they were before, Jim. Having said that, is there something to be said, though, about these high-frequency guys, these guys on Wall Street, the masters of the universe, the pharaohs of Wall Street, actually shaking out the little guy here and there, manipulating the emotions of these guys, creating these opportunities for themselves, in addition to this high-frequency stuff that sends out all these phantom trades, like over half these trades don't even count. They cancel them. I know it's not illegal, and I was one of the first people to say that the Michael Lewis book was sort of ridiculous in my point of view. But this high frequency thing, in my mind, has gotten out of hand.
Well, if you look at let's say the way oil prices are swinging around, supply and demand is not changing that dramatically.
Change 24 hours,
it doesn't change that much. So that really has become almost a casino-like. I actually think I like your point about how the retail investors pretty much stayed the course, and I actually think a lot of these swings are being driven by these high frequency traders. I really do believe that folks can reevaluate their companies. If they think China's a big problem, which I don't think is as big as the market says it is, then let's go focus on more domestic U.S. companies where the growth, I think, continues to be strong. So I think actually the retail investor has actually hung in there pretty well, despite the shakeout that I think these the high frequency guys are trying to create.
Although, let's talk about the stock market. Its role, its traditional role, is something of a harbinger of things to come. The message that it's sending about the U.S. economy. Okay, I keep hearing, okay, China, 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 but we've got some interesting things here with our economy. You could say we're a lumbering giant, if you will. Certainly, we're not. This is not the most robust of economies, and could the stock market itself actually trigger the recession that some people fear? I'll start with you, Jim.
Well, I certainly hope that's not the case, because I look at where we are today. I look at a banking system that has less leverage and banks are better capitalized. I look at a housing market that continues to outperform, despite, by the way, the millennials not participating. So imagine when they do get involved, and what's going to get them involved? High rent's going to bring them in. So I look at consumer confidence up, job growth up. I look at our domestic economy, and my belief is the stock market shouldn't drive us down. If anything, stocks should continue to be the best performing asset. U.S. focused domestic stocks, best performing asset based on the economic performance that we have.
All right, Jim, we went 1,400 days without a correction. Finally, we got to correction. Okay, great. I'm glad that's over with. But now, when does it turn, or do we have to now have the bear market? Because it's been a long time since we had a bear market.
Sure, and I don't believe, based on anything we're looking at in the economy, that we need to have a bear market right now. Certainly, we feel some downward pressure. To Liz's point, I don't see a catalyst in the market that's going to cause a 2008 crisis. However, when you think about what October 87, to a certain extent, some mutual funds that are going to be forced to redeem or get liquidations and whatnot, they don't have a lot of cash. There could be some technical issues that force a little more selling, but I still believe that stronger hands are going to prevail right now, and I'm not betting on a bear market today.
We just have to, real quick, for the most part, to Liz Ann's quote there, the Fed normally goes into these rate hike cycles when they feel like the economy can go without the trading wheels. It feels like they are set on hiking now to prove that they're not controlled by Wall Street, and that might be a huge mistake if the economy doesn't back that up.
You know, I think the markets are trying to intimidate the Fed a little bit not to make a move. I think they've signaled. I think they should. I think you and Warren Buffett agree. You don't care about Warren Buffett doesn't care about the Fed, and you want them out of the way.
Right.
So actually, I'd like to see one and done, because I think that's what they've signaled, and I think we can be okay with that.
All right, guys, let's leave it right there. We'll see you back here shortly. And Jim, here's another thing. This crude oil free fall, if you will, began with Saudi Arabia, and that's shocking. Late last year, when they said, "Listen, we're going to actually pump more and not less." I thought then that they launched a war against U.S. frackers. But having said that, I saw some pictures over the weekend. They've begun building their fence. I don't know if you guys have seen this fence. It's an amazing thing. Donald Trump ate his heart out. I mean, this fence is absolutely amazing. It's got, it's just the most amazing thing in the world. It's going to cover their complete border. I think they're going to have to blink soon. And if they do, I think oil can rocket higher.
Well, I actually like your comment that oil, I'm not trying to time the bottom, but I do think we are closer to the bottom, and I would actually expect oil prices to start moving up from here. I've actually been liking some of the major oil producers because I think besides dividend players, they can weather the storm. But specifically, OPEC did just blink, and they said they're willing to talk. I do think they went to war on some of their neighbors and also on the U.S. energy independence. What solves low oil prices is low oil prices, and I think as our U.S. stockpiles are dropping, I think we can see some pressure to the upside.